The dollar is in trouble. Recently, there's been a fundamental shift in monetary policy that's bringing into question the US dollar's strength against other currencies. And a concerning split in the global economy is increasing the odds that China may dethrone the US dollar.
The US dollar is the de facto reserve currency of the world. You can't have more than one top dog.
The founder of independent speculator Lobo Tiggre has a history of going where others dare not tread. I'm Elijah K. Johnson, and you're watching the Miles Franklin Market Update. Thank you all for tuning in, and a special thank you to Lobo Tiggre for joining us today.
Happy to be with you, Elijah.
Fantastic. Now, you recently wrote an article, and you said that really suddenly in 2020, because of all the money printing by the Fed and expansion of the money supply, we've actually caught up with a lot of other countries with respect to how much money printing and really debasement of the currency those other countries are doing. And now we're kind of caught up. We've been printing more money than a lot of other countries.
First and foremost, it's not just me saying this. I'm using Fed data, which everyone uses. And whatever biases there may or may not be there, it's not mine, it's the Fed's. And it's really quite striking. You look at the charts, of course, and they all go up. And other countries responded to the economic shutdowns from the COVID-19 situation. And there's been this perception out there, okay, everybody's doing it, right? And so what I wanted to know is who's winning the race to the bottom? Who's winning the race to debase? Who's doing it the most? And no surprise, it came out that the United States is way on top. And this data is readily available on the Fed. There was a Financial Times article just out this morning as you and I speak on Tuesday, showing a similar chart to the one I included in my article at independentspeculator.com. It just shows this really striking rise. And what I did, though, is I didn't just compare that to inflation or whatever. I compared that to other currencies. And you can see how Europe, with its generous programs, has been printing money to fund them for quite some time. And as you say, it's the U.S. catching up now. So the other way we see this in the data is that the dollar has been falling in comparison to other currencies. And quite strikingly, in 2020, it went really into reverse and hit 3-year lows. And it's not just, it struggled down over 3 years. No, it was higher, and it was pretty high relative to other currencies for years. And then in 2020, that went into reverse, and the dollar broke below 90. It's ticked up a little bit recently, but it's still near 3-year lows. And that's, I think, a direct result of the money printing we're talking about and the U.S. catching up in the race to debase.
Now, you talk about also that there's this split going on in the global economy and really which nations hold the power in some sense. Why is that concerning for the U.S. dollar?
The U.S. dollar is the de facto reserve currency of the world. You can't have more than one top dog. And it's not just China. There are a lot of countries that are not happy about this. It puts them at a disadvantage. Again, long story here, but for those who I presume are largely of like mind in your audience, the U.S. dollar's dominance has allowed the United States to export inflation. We print dollars and we use them to pay for things in other countries. And so instead of all that increased money supply having more dollars going after fewer goods in the U.S., it happens outside the U.S. So it's very, very important if anything changes that. And there are not just China, but other countries that would like to see that change. Russia, for one. It's quite interesting that Russia just recently, the official numbers are now out that they have more gold on their central bank's reserves than dollars. So the shift away from dollars is striking there. China, who knows? Nobody believes the numbers, the official numbers there. We know they're accumulating gold. We who follow these things suspect strongly that they're accumulating a lot more than they admit to. I'm not trying to be overly melodramatic here, but these are not countries that are interested in seeing the United States remain number one forever. In fact, after the 2020 figures have been coming out, China's is the only economy that seems to be reporting GDP growth in 2020, which brings it much closer to becoming the number one economy in the world. Why would they want to be the number one economy in the world and have some other country's currency be the reserve currency? Why would either country or others that are less friendly to the United States want their international settlements clearing through New York? Or why would they want their banking wire transfers to be cleared through the SWIFT system? So they are working on alternatives to all of these things. It's been going on for years. And 2020 just seems like a pivotal moment where the reset, such as it is, whatever you may think about the virus, but the situation and the shutdowns, the shifts that are resulting, it just seems like a lot of things are coming to a head. Now, I want to be very clear. I am not saying that the dollar is going straight downhill from here and it's going into hyperinflation. The end of the dollar is nigh. I'm not saying that. When a tide shifts, at that moment, the ocean doesn't instantly drop, right? But it's a very important point when the tide shifts. And it does seem to me that perhaps the tide has shifted and it will begin gathering steam as other countries, which are not just little penny-ante countries. I mean, if China becomes the number one economy in the world, that's a serious issue when those in charge there have no interest in seeing the dollar continue as reserve currency of the world. And as that changes, sorry, I've gone on for a long time on one short question, but this is important. To the degree that the United States the United States dollar loses its status as a reserve currency of the world, then all these other countries that use dollars, some countries use the dollar as their own currency, like Panama, right? They don't even bother with their sucre; they trade in dollars. As that changes and all those dollars come home, then the United States' ability to export inflation goes away. And you have more dollars chasing fewer goods in the United States, and the potential for very high inflation. Well, I see that anyway with the money printing that's going on. But if this shift happens and the export of dollars goes into reverse, then that could really shift into a higher gear, which has really big implications for monetary metals, commodities, anything real, certainly anything priced in dollars.
It is an interesting situation that the U.S. is in where we have so much, I think it's the majority of dollars are actually outside of the United States. Is that normal for a currency, or is this kind of just unique to the U.S.?
I think it's pretty unique to the U.S. I have to say that I don't know the specific numbers. I don't know that anybody really knows those specific numbers. And when you say that, you're referring to M0, and you're referring to like physical dollar bills, right? It's said that in Russia, a large chunk of the actual real business there is settled in U.S. cash. Nobody wants to hold rubles. And it's hard to say how much of that there really is out there. I'm not aware of any statistic that I could consider reliable in that regard. But then you have, M1, M2, and Fed no longer tracks M3. But, velocity of money matters in a fractional reserve banking system. So the existence of physical dollars outside the United States, it's interesting what happens if those come back. But does it really outnumber the multiplied dollars in the fractional reserve banking system in the United States? Frankly, I don't know the answer to that question. But dollars coming home is not good for the value of the dollar anyway.
And there are a couple of things that you mentioned that could really trigger this flight back for those dollars back to the U.S. Could you expand on that? I know you said that one of them could be the end of the petrodollar.
Right. This is another thing it's certainly not my original idea. It's been talked about for a while. But what happened in the 70s when Richard Nixon took the U.S. off the remnants of the U.S. dollar was he got that promise from Saudi Arabia to trade and sell oil only in dollars. And so instead of having the dollar be on a gold standard, we kind of had this petrodollar standard where anybody who wanted to buy oil, which is basically everybody, would then need dollars in most cases to be able to pay for it. So it created a new demand for dollars when redeemability in gold went away. And China has already been working to undermine this, right? They've been trying to set up ways for them to pay for oil without using dollars, clearing through Shanghai, and even linking it to gold to some degree. So interesting things going on. What I'm saying is not that suddenly I'm aware of some secret thing that's just been decided in Moscow or Beijing. My ex-CIA spooks haven't told me some incredible secret that only I know. That's not what I'm saying. What I'm saying is that you see this shift in power happening. I think it's not something that I need to struggle to defend. Everybody can see this happening. And we see that they're already putting mechanisms in place. So what I'm saying is more of this tidal shift argument. I'm sorry, I know it'd be more exciting if I could say, look, on March 19th, 2021, this is going to happen, and you better want to have gold when that does. We saw claims like that in 2019 when the Basel III agreement came in place. Those kinds of things I think are a bit hypey. I'm not ready to defend anything like that. And I made up that number. There's nothing happening on March 19th. I'm saying that we're seeing more and more evidence that this tidal shift has happened. And it may seem like, dollar is king forever. But again, remember that at the moment of a tidal shift, you don't see much difference in the ocean's level. But as it picks up speed, it goes faster and faster. The water level drops faster and faster. And when the tides are really flowing, you see really dramatic moves. I think we're headed in that direction. The writing is on the wall. Maybe a new administration in Washington can make friends with China or appear to, but I'm not sure that you can. And I'm not sure that they want to. There's no reason for China to want to play second fiddle to the United States through the 21st century.
And besides the end of the petrodollar, one of the other things that you say could trigger this is essentially the Fed just continuing to print a lot of money.
Sorry, it's not just the money printing. I mean, and the Fed doesn't print the money, the Treasury prints the money, but it's it's losing control of the situation. Right? They say, well, we're taking care of everything. We have it under control. There's no inflation. We can let inflation run hot because it was low. We have our new symmetrical target, right? The fact that inflation by CPI was lower than we wanted. Now we can let it go higher than we might normally want, and it's all okay, right? Everything's under control. Nothing to look here. These are not the droids you're looking for. Move along, right? But what happens if that narrative breaks down? Right? What happens if they say, inflation's up to 3.5%. Maybe we should tamp down a little bit on inflation. And the markets have a taper tantrum, right? Right? It's the end of the world. Markets tank, everything goes bad, and they say, okay, no, we're kidding, we're not gonna tighten, right? But then inflation keeps going, and then what, right? If they can't control the inflation that they say they want, why would anybody want to hold dollars? And all those dollars we were talking about before, they start coming home, or even U.S. Dollar holders. If suddenly you're worried about inflation, why would you want to hold currency in your hand that's evaporating, even as you look at it? It's Gresham's law, right? As soon as that becomes a reality, that people start worrying about the longevity of these little green pieces of paper and their digital ghosts, right? Things can start happening really quickly.
And if things do start happening really quickly, I mean, it seems like it would be bullish for gold. Where are you currently in your forecast for gold? Because I know you've mentioned how you can't just be a blind bull for gold, right? Would you say you're kind of cautiously optimistic?
No, I would say that I'm extremely optimistic. I'm uber bullish on gold and silver, by the way. I do not accept the notion that's popular these days that silver has just become another industrial metal, another topic, but one dear to my heart. I'm extremely bullish, but I'm a cautious speculator. Just because I'm bullish doesn't mean I can't be wrong. I mean, just the fact of the matter is that we hard money advocates, gold and silver bulls, back after the crisis of 2008, we like, oh yeah, this is it. This is everything we've been predicting. It's happening, right? It's off to the races now. Gold's going to the moon. And we were right for a few years. And then 2011 comes along, markets go into reverse. And in 2011, governments were still printing money supply was increasing, the economy still sucked. Europe really has never really recovered from 2008 in any big way, right? Everything looked bad for fiat currencies back then. And there were people predicting $5,000 gold, $10,000 gold, right? It was the fundamentals were so strong. I can't shake that memory, right? We were so convinced we were right. And all the data looked like we were right. All our theories about money printing, everything, from Milton Friedman to Hayek, and for decades, gold bugs had been waiting for something like 2008, and it proved that we were right. And then 2011 comes along, and we get a 5-year bear in gold that almost no gold bugs expected. The only one in our camp I remember sounding a really loud and clear warning in 2011 was David Morgan. Give credit where due. But the rest of us were convinced it was just going up and up. So I can't forget that, and I'm convinced now it's going up. I am. I'm not cautiously bullish. I'm very bullish, but I'm well aware that I can make mistakes. I have in the past, and I'm not willing to let my belief in what I think is going to happen matter more than the data. Right? If things go into reverse, I'm not going down with the ship. I'm not a perma bull, and I will. So what am I saying? I'm not saying I'm selling anything now. I do have a strategy I call the upside maximizer, which is it's sort of like a stop loss, but it's not used to stop losses. It's used to lock in big wins. And I have a lot of big wins after 2020. It's a good position to be in, right? If gold goes into reverse, I'm not looking at a disaster. I'm looking at stopping out of winning positions and locking in gains. So I'm cautious as a speculator. I'm very bullish as a forward-looking guy, I suppose.
So in some sense, kind of the short term, who knows what's going to happen. But long term, if we look at gold, I mean, it seems like if you were going to have a long-term bear case for gold, it would be then you'd kind of be long-term bullish on the dollar, but it doesn't seem like that's really possible.
Yeah, which is really right. I used to have a bear case, but Powell shot a gigantic hole in it. I don't actually have. This is one reason why I'm so bullish. My bear case, near-term bear case for gold was, okay, vaccines, the pandemic goes away, everybody's happy, everybody's traveling again, everybody's back to work again, everybody's going to restaurants again. You could not only see a return to normal, you could see an overshoot. You could see all that pent-up demand, all that cabin fever just cut loose this summer, and spending and travel and entertainment and just this gigantic gush of economic activity. And while people have been saving during the time of fear and hunkering down, that savings could go into reverse. Americans have had no savings to speak of for decades. Suddenly they got worried and they saved some. What do they stop saving? And they start spending again, right? So we could see this heat up this summer. We could then see the government say, oh, well, we don't need to print any more money, or we don't need all these easy money conditions. Everything's fine, right? I was worried that the appearance of this, robust surge post-COVID could trick the powers that be and to stop being the idiots that we know they normally are. That's a technical description there, economic term. But Powell has said no. Powell has already said they're modeling that. They're expecting that. They think there's going to be a surge this summer. They think inflation is going to run hotter in response, but it's not real. We're not going to believe it. That's not, we know that's just going to be a one-off artifact, and we will not respond. We will not raise rates in response to that surge. So if the government's going to ignore an overheated economy potentially this summer, what else could they do? Biden's got plans for trillions, just two to start with. I think that's very much just to start with. The Green New Deal, that takes a lot of spending to make that happen. So, but it's hard for me to find this bear case. What is going to cause the government, the U.S. government, which prints the dollars, and commodities are still priced in dollars, gold's still priced in dollars. What is going to make the U.S. tighten? Well, they're telling us that they're not going to anytime soon. I mean, they're talking maybe 2023. So I don't have a bear case, but I still can't forget markets going into reverse in 2011, right? If somehow we're wrong, if somehow the 2,000 plus price that we saw last summer was the peak this time around, I don't think that, but I'm not God, right? I can't know the future, and no other analyst can either. No other analyst is God either, no matter how persuasive they sound. So, it's fine to be a bull, but don't trick yourself into thinking that your belief is knowledge of the future.
Definitely, none of us can predict the future, which is definitely true. Well, Lobo, Tiggre, thank you so much for your time today. Before we let you go, where can people find you online? And any last thoughts you'd like to add?
Well, thank you for that last bit, because I don't want to end on such a negative sounding note. I want to be realistic. I want to be honest with people. I don't want to be a cheerleader. Ooh, yeah, everything's going to be fine. And I definitely don't want anybody to feel betrayed if they buy something and then it goes down, right? But I am bullish. I am deploying. I have bought recently. I have a shopping list now, and I am watching the markets. I looked before we spoke, and I'll look again after we spoke, and I hope to be buying more. So I want to leave on that note, right? That I am, and I'm putting my money where my keyboard is on that. As for where to find us, it's independentspeculator.com. There is really a wealth of free information there, free articles, free reports. Most particular, the topic that you and I are discussing, Elijah, there's a recent post called The Race to Debase, who's winning the race to debase. And that's a good starting point for these ideas, at least, that we've been discussing.
Well, Lobo, Tiggre, thank you once again for your time.
Thank you, Elijah.